What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news from all the major FAANG stocks. And this week, we learned that the online ad business is officially back. We learned that investors have lost patience already with Microsoft, and we are on the eve of earnings for Apple, Amazon, and eventually NVIDIA as well. So we better not waste any more of your time and kick things off like we always do with Meta Platforms. Start of the week at $296. This one defying gravity, up nearly 10% to finish the week close to $325 per share. The company reported their Q2 earnings back on the 26th, just 2 days ago. Revenue coming in at $32 billion. That was 11% growth, and they beat expectations by over $970 million, certainly impressing me and Wall Street at the same time. On top of that, they impressed on the revenue estimates as well. The upcoming Q3, expecting revenue between $32 and $34.5 billion. The estimate was for $31.1 billion. That was the midpoint. This company is probably going to come over the high-end estimate. So, as you'd expect on Wall Street, whenever you have this type of guidance that more over and above where Wall Street was, well, they are starting to revise their estimates. We're noticing this with not only Meta, but Google as well. Wall Street upping their estimates by about $1 billion on that revenue side for the foreseeable future. This is obviously great for Meta's business, but we also have to understand this is also great for the economy. On the other side of these ads are conversions, there are purchases, there are phone calls, there are new services and goods being bought. On all of these clicks flies in a lot of the face of all the negative speak that you've had, although a lot of the negative kind of recession talk has quieted down a little bit. This definitely flying in the face of that. Now, Meta said to plan features to boost its retention rate at Threads as more than half of the users quit. We talked about this, I believe, on last week's show or maybe the week before. Look, it's one thing to get a bunch of users to click a button on one of the world's most popular apps and sign up and get brands to do it. This is Meta, after all, not some startup that no one's ever necessarily heard of. But like we said 2 weeks ago, this is an $800 billion company. For this Threads app to ever have moved the needle over at this company, they need lots and lots of users. I don't think that's going to happen. Now, moving on to Apple. Start of the week at $194, finished flat ahead of earnings on August 3rd for Apple as it finished the week. We'll call that $196 per share. Analysts are expecting the company to top its Q3 earnings estimate led by Macintosh and its services business as they are heading into a refresh for that iPhone market. We got some data out of Intel yesterday during their earnings, which actually kind of shows that, PC demand has more or less bottomed. Now, Intel's no longer making the chips that go into Macintosh computers, but as go Intel-based PCs, as go Macintosh computers as well. And so I was not expecting the Macintosh to have strong results, but after the Intel earnings, certainly expecting better than expected results there. We'll see if we get any other news from the company on August 3rd. Apple continues to gain ground in the Chinese smartphone market as sales rose 6.1% year over year, as most other competitors saw their market share dip inside of the great country of China. Now, new iPhone 15, the upcoming model from Apple, likely to have a wide camera sensor and a few new features, including smaller bezels on the side of the display, which Apple seems to be able to shrink maybe a millimeter or two every generation. However, the company is going to keep the shipments of its next iPhone in line with the prior model, informing suppliers that roughly 85 million units initially will be ordered. Moving on to Amazon, start of the week at $130, drifting higher, up over 1% to finish the week close to $132 per share. Amazon also reports on August 3rd, along with Apple. Now, AWS, the cloud computing arm inside of Amazon, reportedly has, quote, thousands of customers trying out its new AI service. The company's Bedrock model unveiled on AWS, which gives customers the ability to use foundational large language models, allows you to essentially kind of build on top of them in an open source format using Amazon's cloud services. Doesn't surprise me that you have thousands of customers trying it out at this stage. But again, Amazon is a large company. needless to say, they need a heck of a lot more than 1,000 people trying it. They need thousands actually paying for it. Amazon could face an FTC lawsuit looking to break up the e-commerce giant very, very soon. The FTC is reportedly finalizing a highly anticipated antitrust lawsuit against the e-commerce giant, targeting its Amazon Prime business and likely third-party sellers. If the FTC is successful, you could eventually break up the e-commerce giant, maybe separating out the e-commerce business from the ad business, from the Prime business, from the TV and media business, and maybe the AWS business. I tell you what, if they did that in especially a hot market like we have right now, and maybe for the next couple of years, well, Amazon probably wildly undervalued at just $1.3 trillion. Amazon and iRobot, the robot vacuum maker that Amazon agreed to acquire several months ago, they agreed on a lower price for the acquisition. Amazon going to pay $51.75 per share compared to the $61 per share agreed upon. That is because iRobot had to agree into a new $200 million financing facility to fund its ongoing operations, as that business is essentially not profitable because they have to spend a ton of money on Amazon buying ads and paying commissions to Amazon. That's why it's actually a great deal for Amazon. The market doesn't like this one, as iRobot is trading just south of $40. And again, the buyout price is now $51.75. The people that are absolutely loving this is anybody that is competing against iRobot, because Amazon, it appears, has them in a tight spot. Moving on to Netflix, start of the week at $421.5, up 1% to finish the week. We'll call that $426 per share. Netflix said to tweak its Microsoft deal, and it's going to lower its ad prices on the platform to boost its growth. Netflix initially agreed with an advertising deal with Microsoft, which was kind of interesting, and they offered a revenue guarantee to the tech giant, but they are going to reduce that and potentially start to sell ads from other companies, potentially maybe even Google, maybe even the Trade Desk as well. There's probably other companies that do this. Company is lowering CPM, or essentially price per thousand views, to $39 to $45. That is down from $45 to $55. It's really rare to get that type of clarity on how much Netflix is charging. Seems like the top of the mark in terms of CPMs, but when you're the top of the mark like Netflix, you can charge it. Moving on to NVIDIA, start of the week at $446 per share. This stock has no gravity, as it's up another 4.8% to finish the week at $467.50. NVIDIA still about a month away from earnings, just less than a month away on earnings on 8/23. Intel, like we talked about during the Apple segment, surged on its Q2 results, showing that PC rebound is underway. Now, doesn't necessarily directly relate to NVIDIA, because NVIDIA is obviously making a ton of their money right now from larger data center GPUs. But look, that market will become a little bit like, we're going to sit here a year from now and AMD is going to have a product. Intel might even have a product. I'm not exactly sure how great Intel's products will be, and I'm not exactly sure how, AMD's product is going to be accepted into the marketplace. But what we know is that more competition is coming. Companies like Google have their own custom offerings. Meta's working on a custom offering. They're all going to work on a custom offering. Amazon as well. And so what that means is probably you'll have a little bit less pricing power from NVIDIA. You probably have margins come under pressure a little bit. And then maybe just the amount of volume that is required. Again, once you build out these AI servers, it's not like you need to build another one tomorrow. We're still in the build out phase, don't get me wrong, but eventually that phase starts to slow down a little bit, or at least the pace of that slows down a little bit, and you kind of realize the cost of that capex that you invested in that AI server, and you run them for maybe a couple of years or so. So the long story short is NVIDIA is going to have to get back to the consumer market, okay? The consumer GPUs being used in your just traditional gaming PCs, eventually that market is going to help support the stock price, considering how far it's run. And if the PC market is starting to show a turnaround or rebound or bottoming, whatever term you want to use, probably good for NVIDIA in the longer run. TSM plans to invest $2.9 billion for an advanced chip plant in Taiwan amid the rise of AI, when Taiwan semiconductor manufacturer reported their earnings last week. They were somewhat disappointing, but on the AI side, they are seeing rapid growth there. The company investing to tap into that. AMD plans a $400 million investment in the great country of India to bolster its R&D. The company already has an over 500,000 square foot campus in the great country of India with an office footprint over 10 location, and they have 6,500 employees in the country. So AMD doubling down on India when it comes to manufacturing, or really the R&D behind the chips. Moving on to Google, start of the week at 122.44, up over 8%. This one was like topping formation. Nope. Finished the week at 132.58. This is after the company reported their Q2 earnings as well, primarily driven higher by the fact that that ad market looks absolutely sensational. And then you had Meta report as well. Meta gives guidance, Google does not. And so I think investors and analysts are correctly reading through that Alphabet's upcoming earnings needed to be revised up. And that's exactly what we saw. In fact, very similar to Meta, you're seeing about $1 billion added to the estimates for the upcoming quarters for Google. The company did talk a lot about AI on its conference call, but nothing about pricing, nothing about really a lot of revenue coming in the door. And look, it has to be a lot of revenue, okay? Needless to say, Google, north of a $1.6 trillion company. In order to move the needle over at this company, it actually needs to be significant revenue. But that was enough for investors, kind of just the talk and the hope and the promise of AI revenue was enough for Google to continue to move higher. Now, another impressive thing that Google is doing is their smartphone shipments surged in the United States in Q2, while the overall smartphone market actually slumped. Data shows that Google Pixel phones rose over 48% over the last year, while Samsung saw a 37% decline and Motorola saw a 17% drop. So Google very quietly gobbling up market share from Samsung and Motorola and pretty much anybody else that wants an Android device. I don't think this is going out on a limb at all. Google is probably actually going to have, they already have the most widely used operating system when it comes to mobile phones. They are probably going to have the highest number of units and most phones sold at some point. I believe they'll probably outsell Apple when it comes to these units. Again, this is globally, and they've done it very quietly, although they do a lot of advertising. I've noticed a ton of advertisement as it relates to the Google Pixel phone, and obviously an advertising company at its heart, being good at advertising makes a lot of sense. Now, moving on to Microsoft. Start of the week at 344. This one went in reverse, down about 1.67% to finish the week at 338 as the company reported their Q2 earnings, and investors did not like what they see here. Revenues increased by about 8.3% year over year, but company talked a lot about massive investment. In fact, they gave you like sequential. We are going to increase CapEx and spend on the AI stuff quarter over quarter over quarter, really for the next 4 quarters. And so the company also gave you guidance as well. The total guidance coming between $53.8 billion up to $54.8 billion. Wall Street was expecting a number closer to $55 billion. This sent shares in reverse. I talked about this on our Microsoft video. This is a case of Wall Street just being very, very short-sighted. Microsoft is one of the few companies that is actually going to be generating revenue from its Copilot 365 product, and there is going to be a massive amount of people that are going to be signing up for it. How do you know that? Okay, Microsoft's already told you that. They've already told you that they're going to have to invest and invest and invest and invest. And why are they doing that? Because they know a ton of their clients are going to bolt on a $30 subscription. Now, the margins aren't going to be the same. It's higher compute, and so there's going to be higher costs for Microsoft, but those revenues are going to absolutely skyrocket over at Microsoft. And on top of that, you've got scale and you've got cross-selling opportunities as you get people inside of the Microsoft AI ecosystem. You can sell them on more Azure services. You can sell them on other like security services. There's a lot of things you can roll up once you get them in your AI ecosystem. We've talked about this when like cell phones and smartphones were getting super popular. Okay, it was all about locking someone in your your ecosystem, okay? The same thing's going to be true for AI. You're going to have AI ecosystems. Microsoft's is likely going to be one of the biggest, if not the biggest, and certainly from the corporate perspective and a corporate productivity perspective, it is going to be the biggest. And we are going to look back a year from now, 2 years from now, and see that this company's revenues are going to skyrocket. Moving on to Tesla, start of the week at 258, up 3.4%, finished the week at 266. This despite the great state of California investigating Tesla on its autopilot safety issues. I just drove 2 hours in traffic here in California in a beautiful Tesla Model Y, and I will trust the Tesla Model Y driving itself than darn near every driver that I drove past here on the California highways. Joking a little bit aside, but this is nothing new. The company will probably get past this and eventually move forward. Speaking of moving forward, we'll move on to the technical segment of the show. And the S&P 500 is, I mean, if you've been bearish, guys, it's not showing up, at least in the stock charts. In fact, we've broken above the range. Now we're sitting on the range. We were expecting a pullback, but this market just continues to show strength. Looks like it just wants to continue to go higher. There is an absolute absence of sellers in this market, and until the sellers show up, there is almost no reason to be bearish, to be honest with you. Now, speaking of no reason to be bearish, look at that chart from Meta. That thing continues to go up. Once we got over this 300 level and kind of really solidified and pushed over and above, looks like we're going to really test highs on Meta. That would take us up into the 380s. Speaking of highs, Apple hovering above an all-time high as it approaches its earning dates next week on 8/3. We'll see what we get with Apple. Do we get a Microsoft move? Even if it's a Microsoft move, it's like a 1% move down, and it's not really that big of a deal. Do you get a larger move down? You get a larger move down in Apple. That would obviously trigger kind of a larger move down in the S&P 500, probably create buying opportunities. If Apple somehow, look, like I don't exactly know what Apple's going to be able to do on their conference call to push things higher. Maybe the smartphone business is a lot better. And maybe it's going to be like the ad business, like for Meta and Google, that it just surprises people and it moves higher. You're coming up on a refresh. Don't anticipate that. I anticipate a Microsoft-like reaction with Apple where it just kind of hovers at this range. Another company reporting their earnings next week will be Amazon, looking very much just in the shorter term like the S&P 500. Been making a beautiful series of higher highs, higher lows. You could probably drop that line down there, and you're kind of hovering above that. A move higher on Amazon will take us into kind of a resistance range between like 140 and 145. A rejection pulls you down to areas where you should probably be buying the e-commerce giant now. Speaking of rejection, Netflix got rejected after its earnings. Recovered a little bit this week, is essentially floating in the middle of a range, which often happens. You see these chart formations a lot of times on the channel. You know, when the stock's going down, it's a downward channel. Right now, we've got an upper channel represented by this lower purple line, and we'll change this upper one to a beautiful orange shade. You don't get a ton of opportunities to buy the stock at the bottom of the range. In fact, you have usually a matter of days. And so if you're not following this stuff like a hawk, you tend to miss it. That is why I tend to start positions in the middle of a range because, again, everybody's looking at the same chart. Everybody's looking to try to buy Netflix if they want to buy it. And so when it touches the bottom of an upper channel, it usually spends a day or two there and then rallies hard. So if you're trying to accumulate shares of Netflix, this is the area where you begin to nibble. Now, speaking of nibbling or maybe rocket ships, that would be NVIDIA's chart. Looks absolutely sensational. Continues to just push higher. We have no one has given any indication. And certainly we'll get AMD's read probably next week as well. If you have the PC market starting to bottom, I see no reason why NVIDIA won't come out on 8/23 and say our revenue last quarter was good and our revenue for the next couple of quarters is going to be even better. Moving on to Google, man, we thought this one was going to reverse, create some good buying opportunities, but after reporting better than expected earnings, this one's pushing higher. This one also very much looks like a Meta situation where we're going to retest these highs up here at about 150. $1.50. Moving on to Microsoft, got rejected at its highs, pulled back during and after the earnings call announcement, but you are essentially hanging out at this range. The stock is consolidating here as you have a camp of people that probably believe what I believe is going to happen to Microsoft. They're going to have a surge of revenue. It might not pass through to like a surge in earnings, at least in the shorter term, because there's going to be a lot of capex and things like that. And so there's some investors like digesting that. But in the long run, you give a company like Microsoft revenue, then they figure out the margins on the other side of that. So there's probably a fair amount of investors that believe that. The stock will hesitate here, eventually continue to move higher. And we're seeing no evidence of why it won't continue to do that. Moving on to Tesla, this one looking almost like Google a couple of weeks ago. Looks like a topping pattern here. We talked about there's this level down here. We'll just call it like 210 to maybe upwards of 220 on the stock, where if it pulled down there, that would be an amazing buying opportunity. Company's rolling out a new model, the Cybertruck, and there's certainly some demand for it there. Not sure what the company can announce to really push the stock higher, but obviously these markets, again, have a lack of sellers. And when you have a lack of sellers, you know, I tell you what, the market tends to just continue to drift higher. We will be back next week to see if Apple and Amazon, which report on 8/3, if they can continue to push higher and push these markets higher as well. I hope you all have a wonderful weekend. We'll be back next week, but until then, good luck with your investments.